Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Wednesday, the 31st of December. I'm Stephen Carroll in London. Coming up today, stock markets close in on another bumper year of gains as analysts predict further upside for 2026. Channel tunnel troubles, Eurostar delays continue as passengers are forced to spend the night trapped on trains. Plus, why Bulgaria's big Euro moment faces being tarnished by political turmoil. Let's start with a roundup of our top stories. Global equities are a touch weaker on the final trading day of 2025 after a year that saw markets ride out a series of shocks to deliver repeated record highs. The MSCI All-Country World Index has risen by more than 20% this year, supported by interest rate cuts and huge bets on AI. Precious metals also had a bumper year, with gold and silver both set for their best annual gains since 1979. Silver's more than 140% surge standing out among global assets. But according to Anna Rathbun, CEO and founder of Grenadilla Advisory, there are three areas of concern heading into the new trading year.
Tariffs, we're not done yet. It's certainly with China, our largest trading partner, used to be. Secondly, I think we have to pay attention to the growth factor of the U.S. economy. The uptick in the unemployment rate that we saw last, I know a lot of people took it with a huge grain of salt, but wouldn't be surprised if that continues on an upward trend. And lastly, I think geopolitics, it's hard to price in. It's difficult to understand exactly how it's going to impact investing, but that is something that could scare the markets, especially when valuations are already high.
Despite those notes of caution from Anna Rathbun, none of the 21 Wall Street forecasters surveyed by Bloomberg is predicting a decline in the S&P 500 next year. Their average year-end projection is for a 9% rise in the US benchmark. If correct, stocks are heading for their longest stretch of annual gains since the lead-up to the global financial crisis. China's factory activity staged an unexpected recovery in December, bringing an end to the sector's longest slump on record. The official Manufacturing Purchasing Managers Index rose to 50.1 in the final month of the year, up from 49.2 in November. A reading above 50 indicates expansion. The data defied economists' forecasts for continued weakness and came as President Xi Jinping declared China is set to meet its economic targets for 2025, with growth expected to reach about 5%. Addressing the country's top political advisory body on New Year's Eve, Xi said the economy had demonstrated resilience despite challenges. Rail services between London and continental Europe have resumed after a power issue in the Channel Tunnel led to mass cancellations yesterday. Some Eurostar passenger trains did manage to leave London but ground to a halt before entering the tunnel, forcing hundreds of passengers to spend the night stranded on board. Francis Collings spent the night stuck on a train outside Folkestone.
The power was turned off. So we have lighting, but it's low lighting. But this seems to have affected the toilets, which don't seem to want to flush. We're getting information, but it does seem to be a little bit all over the place. The staff, who are very attentive, don't really know entirely what's going on.
Francis Collins speaking there as Eurostar warned of further delays and last-minute cancellations today due to knock-on effects from the power issue. The shuttle car services through the tunnel are running with delays of up to 6 hours. Thieves have stolen valuables worth millions of euros from safety deposit boxes inside a German bank vault. Images released by police show a large hole drilled through a wall and the vault left ransacked. According to Sparkasse Bank, around 2,700 customers were affected by the theft in the city of Gelsenkirchen. Authorities estimate the stolen items could be worth between 10 and 90 million euros, making it potentially one of the largest thefts in German history. European leaders, including Finnish President Alexander Stubb and European Commission President Ursula von der Leyen, have spoken to discuss Russia's announcement that it would toughen its negotiating stance over Ukraine. The news follows claims from the Kremlin that Ukrainian drones had targeted the residence of President Vladimir Putin. Ukraine's foreign minister has maintained Moscow has no plausible evidence for the alleged attack. The former US ambassador to Ukraine, Stephen Pfeiffer, says the Russian president is attempting to stall peace plans.
Putin is clearly trying to derail the progress that appears to be being made in conversations between Americans, Ukrainians, and Europeans. It's unfortunate that President Trump took Putin's word at face value.
Stephen Pfeiffer was speaking there, the former US ambassador. after their call. Dutch Prime Minister Dick Schoof said the work of Europe's so-called coalition of the willing to ensure security guarantees for Ukraine remains unabated. In his first New Year's address, Germany's Chancellor Friedrich Merz urged trust in the country's ability to overcome challenges, including mounting Russian aggression. Warner Brothers Discovery is planning to reject a takeover bid from Paramount after the company amended the terms of its offer. Bloomberg understands the Warner Brothers board will meet next week to make a final decision, but are concerned that Paramount hasn't increased their offer, which was earlier rejected as inferior to one from Netflix. The news comes after Paramount went public with a $30 a share cash bid 3 days after Warner accepted the deal with Netflix. Our managing editor Lucas Shaw says the deal will come down to compensation.
Money's the biggest thing. The Paramount offer and the Netflix offer are fairly comparable. A lot of it depends on how much of value you assign to the cable networks that Warner Brothers owns. That's CNN, TNT, among many others. Warner Brothers thinks they're worth more than Paramount, hence the disagreement.
Bloomberg's Lucas Shaw there speaking. Since its initial bid, Paramount has altered its offer twice, most recently by including an assurance from billionaire Larry Ellison that he would personally guarantee over $40 billion in equity financing and other commitments. Those are your top stories on the markets. The MSCI Asia Pacific Index outside of Japan is flat this morning. The all-country world index a touch weaker. The Hang Seng in Hong Kong is down by 0.9%. FTSE 100 futures are 0.3 lower. Big moves again in precious metals today. Gold's down over 1%. Silver down 6.7%, trading at $71.14. In a moment, we'll bring you more on the year in markets, plus why Bulgaria joining the euro tomorrow won't be the moment of celebration that some had hoped for. But another story that we've been reading this morning on a day when we're reflecting on the year that was. Bloomberg's Ellen McCoy is looking into her crystal glass to see what the world of wine looks like next year. Her conclusion, cloudy. And that's not just the wine. She writes that there are some certainties like the continuing effects of climate change on grape growers and the rise in the popularity and production of non-alcoholic wines. But on the question of younger people drinking less, she points to survey evidence showing that consumption of wine is actually growing among Gen Z drinkers, largely in line with what previous generations did as they got older as well. Some fun trends that Aaron's also identified in her piece. More sparkling wine we should be expecting, even though champagne consumption is declining. She says this is because this is now a lifestyle wine for every day that people are drinking with things like Chinese takeaways. She expects there to be a rise in popularity of people visiting wineries, experiences being more important to younger customers. And she says the key things to watch this year will be affordability and value. Of course, you've got the trade issues to consider there as well, but also how climate change is going to affect production. She says this will open the door to the rise of more wines from places like Eastern Europe, Greece, also Portugal and Spain offering some interesting value as well. And she has a couple of tips on some of the grapes to look forward to too, and those where you might get some bargains and quality wine in the year to come. You'll find the piece on Bloomberg.com. We'll put a link to it in our podcast show notes. Well, it is the final trading day of 2025 after a year that's seen massive upheaval from trade, tariffs, AI and central bank moves. Our market supporter Valerie Teitel has been guiding us through some of the wildest days of this year. She's joining us this morning to reflect on exactly what happened. Valerie, good morning.
Good morning.
I presume you're exhausted after the year that we've had. Let's start with equities, right? Third annual year of gains. MSCI All Country World Index heading towards 21% gains for this year. We've had lots of all-time highs. We've talked about those. What was it that drove investors to look past things like the tariff headwinds, which were such bigger issues?
I know. Who thought we'd be sitting here after the events of April 2nd, Liberation Day tariffs? The global equity market swings back in April are going to go down in the history books as some of the most jarring for financial markets, on par with what we saw in COVID, what we saw in 2008. But here we are back at all-time highs in global equities, and a lot of that is down to this craze over artificial intelligence. The best performing stock in the MSCI World Index is actually a Japanese memory chip maker that rallied nearly 550% year to date. So the tech industry's booming demand for chip products, that's really driven a lot of global equity markets this year as hyperscalers really rushed to build out this AI infrastructure. It lifted South Korea's chip-heavy index, the KOSPI, up to 75% gains for the year. Here in Europe, though, the catalyst was a bit different. different. European stocks outperformance really had much more to do with Trump lighting the fire under European defense stocks, which saw Germany drop its debt brake and invest hundreds of billions in infrastructure products. That was really the big catalyst in Europe that led to those double-digit gains and the outperformance in the DAX this year.
Bond markets dominated, of course, by the rate cutting for the likes of the Fed and the ECB, a rate hike from the Bank of Japan too to think about there too, but rising fiscal worries in places like the UK also causing some gyrations.
Look, I think for the bond market, it's really cemented that the bond market is now trading off of different factors. We had multiple fiscal dominance events. We saw it in the Treasury market when it balked at the higher government spending. We saw it in the gilts market as well. We see these fiscal dominance events happen all over the world. There was actually one yesterday in Colombia. Colombia announced a hike to their minimum wage, and we saw Colombian bonds sink. We had yields rising 70 basis points. So I think this is going to be becoming a reoccurring factor, how bond markets really are the direction of how governments are going to react instead of the opposite way around. The other thing to add to that is Japan added a lot of fuel to this fire. We saw a very humongous rise in JGB yields. If you look over past history, the volatility in JGBs, really some of the most brutal bond moves of the last 20 years happened in JGBs, especially in the long end of the curve, with JGB yields rising around 100 basis points in quite jarring fashion.
I have to mention, though, precious metals as well. The bumper year that we've been talking about. But again, volatility heading into the end of the year. Silver down over 6% today.
Yeah, it's going to be an interesting year, I think, for metals generally. Precious metals, because I think we're still going to see this continued diversification away from U.S. treasuries into things like gold for central banks. China has been doing that in the last year. That's something that could be a long-term trend, which could keep a decent floor under gold. The other thing to mention just with metals is just the AI race. Copper, silver, used in data centers, likely to, if this data center demand still continues next year, likely to still cause some supply issues for many of these metals.
Okay, Valerie Teitel, thank you for everything this year, for helping to guide us through those mega moments we've had on markets, embracing us for what's to come in 2026. Stay with us. More from Bloomberg Daybreak Europe coming up after this. Now, tomorrow, Bulgaria becomes the 21st country to join the euro, but it's happening at a time of major political turmoil there. The government resigned earlier this month amid massive anti-corruption protests, leaving the country with no up-to-date budget heading into 2026. Our Bulgaria reporter, Slav Okov, joins us now for more. Slav, good morning. Given all the protests then, how much support is there in Bulgaria for joining the euro now?
Good morning, Stephen. Now, Bulgarians are divided over the euro. Nearly half of them currently don't want it, mostly because they fear inflation. But that said, there are two things to mention. The first thing is there have been studies showing that countries have had similar fears before joining. Once the euro is introduced, this mood usually changes. As we speak, the euro enjoys the support of more than 70% of the people in the EU, which is close to a record high. The other important thing is Bulgarians aren't protesting against euro adoption right now. Thousands were on the streets in December demanding rule of law, which is a long-standing issue for the country. It regularly ranks among the European Union's most corrupt members, and this has reflection in every aspect of everyday life.
How significant a moment then is this for Bulgaria's economy?
It is not supposed to bring much of a change in terms of policy making. Bulgaria has had a currency board for almost 3 decades now, which means that its currency has been pegged to the euro at a fixed rate. Bulgaria has a history of low public deficits and one of the lowest debt levels in the European Union. The euro is expected to lower transaction costs for businesses and help tourism and foreign investment. Most importantly, it's a moment that completes the country's integration into the European Union after joining almost 20 years ago. It also means that Bulgaria will now have a voice in the monetary policy of the euro area.
Yeah, and of course that's going to be interesting to take consideration of as well.
Absolutely.
Put these stories together for us, Slav. We're talking about a major moment, a milestone for Bulgaria, not only for its economy, but in its membership of the European Union. But how does this relate to the current political turmoil in the country? Is there any resolution in sight?
Well, finalizing the euro negotiations was among the government's main goals, but still completing this goal didn't save it. So Bulgaria has been in a political crisis for 5 years now, and this crisis actually started with the previous wave of anti-corruption protests back in 2020. So the country has had 7 elections since 2021 without a conclusive result. And now an 8th election is the most likely outcome. So honestly, no, I don't see a resolution coming anytime soon. This instability, however, is not supposed itself to be a problem for the euro area unless it brings higher deficits and more indebtedness.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.